Hi everyone. In this video, we will talk about foreign exchange exposure management and how it impacts different businesses from public-private partnerships to SMEs and international F&B firms. Exchange rate changes can affect profits, costs, and competitiveness. So, managing that risk is crucial. Let's dive right in. Okay, to begin with, let's take a look at this mind map of exchange rate and speculation. We know that, uh, like foreign currency like yen and US dollar is fluctuate over the time. So there is a moment that yen is stronger than US dollar and vice versa. So that has an impact on international trade where the trader speculate any exchange rate whether it will be increase or decrease. Okay, so that's why we have our theory for an exchange as a strategy to mitigate that shortcoming.
Hi everyone, I will explain the impact of foreign exchange exposure on business. Foreign exchange exposure of or FXA refers to the financial risk caused by exchange rate fluctuation. These fluctuations can influence a company's cash flow, revenue, and operating costs. When the domestic currency depreciates, import costs and foreign debt obligations become more expensive. On the other hand, when the local currency appreciates, it can make exports goods less competitive in international markets. Exchange rate volatility also affect financial performance through translation exposure, which means change in the value of foreign subsidiaries when their statements are converted into the parent's currency. This can impact report earnings and investor perceptions. Moreover, exchange rate uncertainty can delay business expansions and investment decisions, as companies prefer to focus on internal cost efficiency during volatile periods. The impact differs across company size. SME are generally more vulnerable because they have limited access to hedging instruments, while multinational firms can use strategies like forward contracts, currency swaps, and natural hedging. Overall, FXA significantly influence profitability, cost structure, pricing strategy, and investment decisions. Therefore, it's crucial for business to adopt proactive currency risk management to maintain financial stability and competitiveness in the long run. Thank you.
Right, so in global markets, firms face currency fluctuation risk that affect profits and cash flow. There are three main types of exposure. First is transaction exposure, that is risk from time lag between deal and payment. For example, a US firm buying goods in uh, Great Britain pounds loses if the pound strengthens. And next, there is translation exposure, accounting impact when consolidating foreign subsidiary statement. For example, yen depreciation lowers the reported USD value. And then next, there is economic exposure. It's, it is long-term effect of competitiveness in market value. For example, if BMW sell its car in the US and then uh, the euro is getting strong, it will make the car cost more and will make the sales decrease. So how can firm act to reduce those risks of exposure? The goal of managing forex is to protect profit and cash flow from exchange rate volatility. For transaction exposure, we usually use forward and future like contract to lock exchange rate and option. The difference between forward and option is you can select not to execute the trade if you have option. If you have forward, you have to execute the trade. And we have also swaps, leading, lagging, and netting. For translation exposure for balance sheet, okay, we can use balance sheet hedge by match asset and liabilities. We can use also forward in previous one and evaluate performance. And then for economic exposure, we can diversify market and sourcing, like the US built a car Chevrolet firm in Japan for its cheaper operation, and then we can match current inflow and outflow, cash flow, and long-term product differentiation.
Public-private partnership or triple P is a long-term collaboration between the public and private sector to provide public infrastructure or service. It emphasizes shared risk, responsibility, and return based on each party's competency and capacity. Main objects are to improve financing efficiency, accelerate infrastructure development, and utilize private sector innovation in public service. Key elements of Triple P include balanced risk allocation, a strong legal and institutional framework, and attractive financing structure for private investors. Triple P applies several financing models such as availability of payments, user fee scheme, or a combination of both. The success of Triple P depends on comprehensive feasibility study, transparent procurement, and contractual mechanism that balance risk between parties. Sustainability of Triple P project is influenced by political uncertainty, environmental issues, and stakeholder engagement. Collaboration among the government, investor, and the community determines long-term success. In international finance management, Triple P are linked to foreign exchange exposure, especially in cross-border or foreign currency finance projects, when revenue are in local currency but debt is in foreign currency. Exchange rate risk arise. Mitigation strategies include currency matching, indexation, hedging instruments such as forward and swap, and government support hedging facilities. Thank you.
Small to medium-sized enterprises. Small and medium enterprises, or SME, are companies whose personal number fall below certain limits. The abbreviation SME is used in the European Union and by international organizations such as the World Bank. SMEs provide innovation spread throughout regions to solve a series of challenges like unequal development, climate change, research efficiency, and social cohesion. SMEs are also involved in many ways, like job creation, unemployment reduction, significant contribution to growth in GDP, sustainable spatial growth, needed money flow, necessary to fund large companies, and the development of appropriate of technology. In the small and medium enterprises or SME context, innovation capabilities are crucial because they help small companies stay relevant and competitive in a changing market. Adopting good innovation can optimize limited research and expand market share. In today's rapidly evolving business environment and volatile uncertainty, digital transformation is crucial for small and medium-sized enterprises seeking to enhance digital and business competitiveness. Digital transformation in SMEs has become a critical research area, emphasizing the need for agility, strategic adoption, and digital capability development. Research from Asian and Commodities indicates that digital transformation refers to the strategic adoption and integration of digital technologies to enhance business operation, which play a crucial role in the successful implementation of operational efficiency depending on management commitment. The next one is International F&B Firm, the national company. International Food and Beverage Firm, referred to as international companies or MNCs, are enterprises that operate in multiple countries producing and selling food and beverage products across a international markets. MNCs in the food and beverage sector often have diverse product lines, including packaged food, beverage, snack, and dairy products, catering to various consumer preference and dietary needs. F&B companies have operations in multiple countries, allowing them to tap into various markets and consumer bases. This global footprint helps them mitigate risk associated with economic fluctuation in any single market. Many international F&B firms have established strong global brands that are recognized and trusted by consumers worldwide, such as Nestle and Unilever. Companies like Nestle or Unilever often localize their product and marketing strategies to align with regional taste and preference. This way to differentiate it involves modifying recipe, packaging, and promotional campaign to suit local markets. Collaborating with local firms can provide valuable insight into market and consumer behavior. Understanding the dynamics of international operation and consumer preference is crucial for international food and beverage firms to thrive in a rapidly changing global market.
Relationship between foreign exchange exposure and management, impact on business, public-private partnerships, small to medium-sized enterprises, and international F&B for multinational companies. Big companies like Nestle and Unilever operate in very large and complex global supply chains. To keep their operations running, they often work together with local SMEs, for example, farmers, suppliers, or distributors. In many developing countries, these partnerships happen through public private partnerships or PPPs, where governments and private companies work together to build things like shared factories or distribution networks. These collaborations are very helpful because they allow SMEs to access bigger markets and grow faster. But at the same time, they also face similar challenges. For example, during the COVID-19 pandemic, many SMEs suffered from delayed shipments and higher transportation costs. Environmental issues like drought caused by climate change also made it difficult to get raw materials. In response, some multinational firms started investing in sustainable projects, such as irrigation systems, through PPPs that combine both government and private effort. Another important issue in this ecosystem is foreign exchange exposure. When the value of a local currency like the Indonesian rupiah goes down, the cost of importing key ingredients like sugar or coffee becomes higher. Big corporations can protect themselves using financial tools such as hedging through currency derivatives or by finding suppliers in other countries. However, small businesses often don't have access to these tools, so they are more vulnerable to when exchange rates change. Lastly, we also need to consider regional and global factors. The Asian Economic Community supports international trade, but it also makes currency management more complex. In addition, macroeconomic factors like central bank interest rates or a stronger US dollar can influence trade and profitability for food and beverage firms in Asia. To stay competitive and stable, they need adaptive risk management strategies, combining financial protection, collaboration through PPPs, and support for SMEs. This will help the whole F&B industry become more resilient against both economic and environmental challenges. Thank you very much for your attention and time. We sincerely apologize for any mistakes during our presentation. Once again, thank you very much.